Could a single decision unravel North America's trade agreement? The USMCA impacts everything from your wallet to your job, and its future is now in question. But how could one person change so much? The potential changes to the USMCA directly affect Canadians. It influences prices, industries, and our economy. Understanding it is key. This is about more than just trade. It's about stability. What will happen to our economy if the agreement changes? What could we do to protect ourselves? We'll delve into the potential threats to the USMCA and what it means for you. Prepare to discover the key factors that affect your economy and the agreement in general, plus what you can do to stay informed. The USMCA, the successor to NAFTA, aimed to modernize trade between Canada, the U.S., and Mexico. Signed in 2020, it impacts nearly every sector of our economy. However, the deal's stability faces challenges. With Trump's potential return, his past criticisms of trade agreements are resurfacing. He suggests renegotiation and even withdrawal from the USMCA. This creates uncertainty for businesses and consumers alike. This situation poses a significant problem. Canadian jobs, supply chains, and investments depend on stable trade relations. Understanding these risks and their possible solutions is vital. We'll examine the core components of the USMCA, Trump's specific grievances, and the potential impacts on Canadian businesses and households. Expect clear explanations and relatable examples, maybe even some helpful charts. This will help you understand what's at stake. Curious about the USMCA and Trump's potential impact? Subscribe now for expert analysis and join our community in the comments. Share your insights and questions. Your perspective is important as we navigate these evolving trade dynamics together, eh? Let's learn and stay informed. To understand the USMCA risk, we need to examine several key areas. First, we'll dissect Trump's specific criticisms, pinpointing which sectors he targets. Next, we'll analyze how these changes could affect Canadian jobs and industries. Consider the auto industry. New tariffs could dramatically increase the cost of vehicles. This would impact both manufacturers and consumers. We'll also explore potential Canadian responses. Could diversification of trade partners mitigate the risks? What negotiating strategies might be employed? By understanding these elements, you'll be better equipped to assess the potential impacts on your own finances and make informed decisions. This knowledge is your best defense. Understanding the USMCA's potential disruption is crucial now because the upcoming U.S. election directly impacts its future. Trump's stated intentions to renegotiate or withdraw create immediate uncertainty. Businesses and consumers must prepare. The pressing need is to understand how these changes could affect your personal finances. Are your investments at risk? Could your job be affected? This uncertainty demands preparation. The challenge lies in predicting the specific impacts. Different sectors will be affected differently. Informed citizens are better equipped to navigate the potential fallout. Therefore, grasping the possible risks and opportunities associated with the USMCA is vital for financial security and economic resilience. Time is of the essence. To grasp the USMCA risks, let's break down key concepts. First, understand tariffs. They're taxes on imported goods, increasing prices for consumers. How might new tariffs affect your grocery bill? Next, consider supply chains. The USMCA facilitates seamless trade across borders. Disruption could cause delays and shortages. Could your favorite product become harder to find? Then there's the concept of investor confidence. Uncertainty discourages investment, slowing economic growth. What could happen to the Canadian dollar? These factors interconnect. Trump's actions could trigger a domino effect. Understanding these basics prepares you to analyze the situation effectively. Visual aids, such as charts illustrating trade flows, could greatly help. So, how can you apply this knowledge? Start by diversifying your investments. Don't put all your eggs in one basket. Consider sectors less reliant on U.S. trade. What if you work in an affected industry? Research alternative career paths or skills training. Proactive planning is key to job security. For businesses, explore new markets outside the U.S. The Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP, offers opportunities. The biggest challenge? Uncertainty. Stay informed. Follow reliable news sources and economic analysis. Knowledge empowers you to adapt and thrive, eh? For advanced strategies, explore currency hedging. Canadian businesses trading with the U.S. can lessen risks from exchange, rate swings. Consult financial experts, eh? They can guide you through the complexities of hedging strategies. A key case study: the 2018 U.S.-China trade war. Businesses that had already diversified their supply chains weathered the storm much more effectively. This highlights proactive adaptation's crucial role. Learning from past events offers valuable insights. Navigating USMCA risks demands a strategic approach. It combines diversification, financial prudence through hedging, and constant informed decision-making. It is your top defense, for sure. Research from the Canadian Centre for Policy Alternatives suggests that a USMCA withdrawal could cost Canada billions. This highlights the economic stakes involved. These projections are based on complex economic models. A recent Bank of Canada report emphasizes the vulnerability of Canadian businesses to trade policy uncertainty. This underscores the need for proactive risk management. Experts agree. Preparation is paramount. Anecdotal evidence from Canadian exporters reveals growing anxiety about potential disruptions. Many are actively exploring alternative markets. This is a practical response. Understanding these implications is vital for Canadians. Make informed decisions, protect your finances, and contribute to a more resilient economy, eh? Still wondering about the actionable insights? Remember, diversification is key. Canadian companies should actively explore markets beyond the U.S., like Asia and Europe. What about those job concerns? Skills training programs can help workers adapt to changing industry needs. Staying ahead of the curve is crucial. And those tariff worries? Currency hedging can help protect businesses from exchange rate fluctuations. Experts say it reduces financial vulnerability. Ultimately, informed citizens and proactive businesses are best positioned to navigate the uncertainty surrounding the USMCA. Stay informed, eh? To recap, understanding the USMCA risks is crucial. Diversify your investments, explore new markets, and stay informed about economic trends. These are your key takeaways. Your next steps: research skills training programs, consult with financial advisors, and advocate for policies that support Canadian businesses. Proactive engagement is essential. By applying these insights, you can protect your finances, enhance your career prospects, and contribute to a more resilient Canadian economy. Now, it's your turn. What steps will you take to prepare for potential USMCA changes? Share your plans in the comments below and let's learn together, hey? In the end, steering through the USMCA's potential turbulence calls for both watchfulness and flexibility. Because the global trade scene is always shifting, staying well-informed is seriously your top tool. Remember, a Canadian who's ready is a Canadian who's strong. So, let's welcome change, back our neighborhoods, and build a future that's tougher and better, eh? We're all in this together. Go on, dig deeper, and always remember, knowing your stuff gives you the edge, especially when the economy's a bit wobbly. Keep hitting the books and stay curious.